Good evening. This is Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. As we speak, Treasury Consulting is a multinational headquartered group based out Singapore. We are a multinational hedge fund who take positions in US, Europe, and Asia. But like I did repeat it many times, we are a proprietary fund. By proprietary, I mean no third party. No third party can invest capital in our fund. In the world of investment banking, we call this M&A, merger and acquisitions. While in the world of accounting, we call this business combinations. I was the corporate treasurer for Americans and Indian company. During my tenure in EXL, an American company, I dealt with many business combinations. Some business combinations were KPI driven, key performance indicator, and some were not KPI driven. But in all business combinations, one thing is clear is that there is a measurement date as well as measurement period. So I have a book of IFRS with me. First, let me study what the hell is measurement period, which is not completely defined in the book. Then I'll explain how practical it is. Measurement period is the period after the acquisition date during which the acquirer may adjust the provisional amounts recognized for the business combination. The measurement period provides the acquirer with a reasonable time to obtain the information necessary to identify and measure as per the acquisition date. So let's take a simplistic example. I repeat, it's an example. Suppose Amazon is buying Microsoft. Now, Microsoft is a big company. So Amazon needs some time to consolidate the Microsoft in his books, and this consolidation is known as acquisition accounting. Now, that's highly unfortunate that majority of the books, even Google, unfortunately, do not speak about acquisition accounting. But we soon speak about acquisition accounting. Now, suppose the deal is done in May 2022. It's an example. And June 2022 is the 10Q. Now, in American parlance, 10Q means quarter. So, Amazon would be reporting the results, June results. They have to, because Amazon is a listed company. Microsoft would also be reporting the results, but these results now more or less would integrate with the Amazon. But that integration isn't easy. Don't expect the integration of Microsoft with Amazon to be done in 1 month. Even in 6 months, not done. So as per accounting standard, the measurement period can maximum be of 1 year, which according to me is highly debatable. Because in the case of deferred considerations, in case of earnouts, 1 year is relatively a small period. Anyways, after once Amazon would be closing the June, they would be keeping some provisions. Provisions of revenue, provisions of cost, provisions of SG&A, provisions of tax, provisions of employee benefits, ESOP, deferred considerations, and everything. After June, Amazon looking for more information, which is called KT, knowledge transfer, from the Microsoft teams, which includes the revenue team, the cost team, the FP&A team, the treasury team, and many more teams. The information would continue to flow to Amazon, and Amazon would continue to process this information as far as his speed is concerned. Now, some information may be a drastic change as compared to they have taken in June. Some information may be on the lighter side as compared to they have taken in the June. Some information may be bombardment. They even not thought about that, and all of a sudden this information is in public, or this is given to Amazon. Now, in this eventuality, the measurement period means, suppose they bought Microsoft in May 2022, which means till June 2022. I repeat, till June 2023, Amazon would get a legal right to integrate the Microsoft. But there is a concept called Business Combination Agreement, BCA. Business Combination Agreement. In Business Combination Agreement, many a times, companies will ask, the acquirer will ask the target that you give me in writing that if after there might be a probability that something would come after the measurement period. Legally speaking, these includes earnouts, which is also known as contingent consideration. This includes deferred consideration. These includes indemnification assets. All three are different. Earnout means contingent. We do not know whether it would happen or it won't happen. We already have a video on earnout on our YouTube channel. You can refer. Deferred consideration means Microsoft is asking too much price. Amazon is willing to pay the price, but unfortunately, Amazon is arranging the money from the banks, the private equity, and all other players, and they need some time to arrange the money. They are ready to give in writing to Microsoft that they would be buying Microsoft, so they need some time for that. This is called deferred consideration. Indemnification asset means the company, basically the target, Microsoft, is indemnifying Amazon that God forbid if any XYZ contingent liability would occur, then Amazon would be paying up to this extent. This is called indemnification assets. Sometimes they are indemnification liabilities also. We call this as indemns. To cut the long discussion short, measurement period play a very important role. And that is something which we really need to understand. Accounting wise, the measurement period is of 1 year. But in a big M&A, especially in the technological sector, when there is so much to assess, so much to work, it isn't feasible all the time to have everything done within a 1 year stipulated period. It's not feasible, technically speaking. Henceforth, when it comes to business combination IFRS 3 or maybe FS 141R as per US GAAP, take a note of this.